The Real Estate Board of Greater Vancouver just released their monthly statistics, so let's talk about what's going on in the real estate market in Vancouver for October 2024. First, let's talk about the number of sales. And as usual, for the last couple of years, the sales are low. Now, the media is reporting that the sales are about 3.8% below what they were last year in September 2023. However, the number, in my opinion, is worse because last September was a pretty slow month in real estate. If we look at the 10-year average, it's about 26% below that number, and I think that's a more realistic representation of how slow the market actually is. As I said, last September was a pretty slow month in real estate. In fact, we didn't even see that much inventory on the market. If we look at the total number of inventory, so not new inventory, but sort of all the inventory that's currently available on the market, for this month, September 2024, we saw a total number of 14,932 listings. It's about a 31.2% increase comparing to September 2023. It is also about 24.2% above the 10-year seasonal average. So as you can see, we had much less inventory on the market than what we see this September. Of course, all of this is quite concerning because if you remember last month update, I talked about how in August, usually a lot of inventory goes off of the market. And that's exactly what we saw. We saw a total number of inventory actually decline as comparing to what we saw in July and as we saw in June. Well, now a lot of that inventory has come back on the market. After the summer holidays, a lot of people are again in a mood to sell their places, especially listing in September, October to sell before New Year's. It's a very common thing in Vancouver. Unfortunately, the sales are not there. The listings are, but the sales aren't yet. Speaking of new listings on the market, we saw a total number of 6,144 listings, which is about a 12.8% increase as opposed to what we saw in terms of new listings last year in September 2023. This number is also about 16.7% above the 10-year seasonal average. So as you can see, we did see more inventory come to the market than usual. It was about 16-17% over the 10-year seasonal average, definitely not as extreme as the total number of inventory. That number is 26% above the 10-year seasonal average. So it's just a lot of inventory that's still left over from the summer that hasn't been sold yet. Now, because of this available inventory on the market and the sales being slower than usual, we of course are starting to see some pretty funky sales to active listings ratio numbers. This statistic tells us how many out of 100 places currently available on the market actually get sold. So by the property type, for detached houses, that number is about 9.1%. For the attached homes, that number is 16.9%. And for apartments, it's about 14.6%. Just to remind you, usually in Vancouver, we see this number being about 24 to 30%. So having it around 15% is pretty low. If you're in the market to buy a condo, right now is one of the better times in terms of how much choices you have and how much negotiating power you have. As you can see, the condos specifically are not selling very well, even though the number of sales to active listings ratio is lower for houses. That number is usually lower for houses anyways. Just to give you an idea, sometimes it's around 17-18% on the higher end. So having it around 9.1%, yeah, it's pretty low. But having the condos being at almost 15% is sort of the more crazy out of the two, the more extraordinary out of the two. So again, condos continue to be not that appealing. And that's a lot to do with the investors because once again, month over month, we are starting to see the rents come down. According to the website called rentals.ca, Vancouver has seen about 9.4% reduction in rental rates year over year. That number is about 2% lower month over month. So from August to September, we saw about a 2% decrease. Now, again, it has to do with a few different things. The interest rates have, of course, a pretty great impact. It's probably the biggest impact. But the other pretty big impact is actually all the restrictions on international students. I will make a separate video talking about the restrictions because I think that subject is very interesting. But it seems like this September, we haven't seen that great number of international students enter Canadian universities, colleges, etc., which makes the rental market a lot softer, and in turn a lot of investors are not really interested in entering the rental market. In fact, a lot of investors are looking to exit the rental market, which in turn increases the number of listings, which in turn sort of makes the market softer. It's a bit of a vicious cycle. But there were a couple of notable events that happened in September. Number one, the interest rate reduction. So now the interest rates have been decreased by another 25 basis points, and it looks like we will see another interest rate reduction closer to the end of October. It'll be interesting to see if it's going to be 50 basis points or if it's going to be 25 basis points. Time will tell, and of course I'll keep you updated on this YouTube channel. There's also quite a few different changes to the lending rules for the first-time home buyers as well as insured mortgages. That's all there in place to sort of stimulate the market more and of course help more people enter the market. I will of course keep an eye on that and see what effect that has on the market, especially the condo market, because of course one-bedroom condos, one bedroom and a den, these sort of starter homes are very popular with a lot of first-time home buyers, and this is the segment of the market that is being pretty soft right now. So we'll see if that's gonna be balanced out a little bit by more first-time home buyers entering the market. And finally, let's talk about the prices. The prices have stayed relatively flat. So for the detached houses, they're about 0.5% lower than what we've seen in September 2023. They're also about 1.3% lower than August 2024. For the apartments, they're about 0.8% lower than what we've seen in September 2023, and the same number lower, 0.8%, as comparing to August 2024. And finally, for attached homes, so these are townhouses as well as duplex units, we're looking at about 1.8% decrease comparing to August 2024, and again, 0.5% decrease comparing to September 2023. This month's statistics have actually surprised me. I thought that the market is going to show a much stronger signs of recovery because of the interest rate reductions, as well as just the natural cycles of real estate. Usually fall time, September, that's when the market starts to pick up more. Yes, you have more listings come to the market because more people are listing, as I mentioned earlier in this video, but usually you also have more buyers enter the market. And of course, there was this great incentive of lower interest rates to have more buyers enter the market. Doesn't look like that has happened yet. So we'll see how the market reacts to more interest rate reductions as well as these new mortgage rules. And of course, I'll keep you updated on this YouTube channel. Subscribe so you don't miss those videos when they do come out. If you enjoyed this video, give it a thumbs up. And if you want to be updated about everything that's going on in real estate industry here in Greater Vancouver, I have an absolutely free newsletter. It comes out every month. If you don't like it, you can unsubscribe. It's not a sales pitch or anything, just gives you an idea of what's going on in the market. And the link to subscribe to that will be in the description of this video. Thanks for watching, and we'll see you next time. Also, I keep on forgetting to mention, I am a real estate agent, so if you are looking to buy or sell real estate or you just need some advice, feel free to give me a call, shoot me an email, shoot me a text message. I'll be happy to help. Okay, thanks for watching. Bye.